Is it possible for Tesla stock to hit all-time highs again in the current situation? If that's what they're going to do, how? When should I make a purchase? We'll go deep into Tesla's most recent innovations in this video, covering everything from their revolutionary home solar and battery storage systems to their audacious aspirations for humanoid robots. So get your popcorn, settle in, and follow us as we investigate the fascinating world of Tesla and the direction that sustainable transportation is taking. Please remember to like this video and subscribe to Tesla Stock News before continuing. Unexpectedly, the business declared that it would not allow its automotive division's gross margin to drop below 20%, but when they failed to meet this goal in the first quarter, reality set in. Although Tesla had promised investors that they would keep this margin for the entire year, it is anticipated that the margin would drop much more in light of recent price reductions. The severity of the issue raised serious concerns. Tesla's performance disproved the theory held by some that decreasing commodity prices would neutralize the effect of the price reductions. Not only did they miss their forecast, but they also did not live up to the expectations of the market. Consequently, investors became apprehensive when Tesla's stock declined. It is important to take into account the advice of renowned stock analyst Dave Ives before making any snap decisions. Dave provided insightful information that may influence one's decision-making process. Now that we're talking about Tesla, this sounds like a scenario that requires more than a cappuccino to address. Well, with 6 price reductions under its belt, Tesla has been under pressure during this difficult time. The business is struggling to decide whether to increase unit sales or preserve profitability. Even while the stock started to recover earlier this year, it now needs to prove China that it can develop sustainably. Tesla's delicate balancing act will be to navigate through the current price war and achieve a gross profit in the area of 20%, excluding credits. Even though I think the stock is cheap, the second half of the year will need to show otherwise. It is anticipated that Tesla's profit margin would continue to decline over the next several months. The fact is that Tesla might not turn a profit this year that investors had anticipated, despite the high hopes of many Tesla bulls. Still, there are a few promising developments to be excited about. If all goes according to plan, Tesla stock may rise above $300 once more. How will the automaker accomplish this, and what conditions must be met for it to occur, is the question. Let's investigate this more. Given the recent price reductions, some Wall Street analysts are worried that Tesla's profit edge may be eroding. Even though the corporation raised pricing earlier this month in the US, it did so after a string of price cuts that were implemented worldwide at the start of the year. Notwithstanding this circumstance, investors ought to consider the wider picture. By gaining economies of scale and maximizing market share, Tesla hopes to become a mass-market automaker and pass on operating cost advantages to customers. In the future, Tesla might result in considerable cost reductions. Investors might profit from this approach significantly more than from a low-volume, high-margin business. Thus, holding on to optimism for the car company might be the best course of action. Whether Tesla's stock can hit all-time highs once more is the unanswered question, even though there are some doubts given the company's strategic orientation, emphasis on cost reduction, and goals for market expansion. It is not completely implausible. We'll see if Tesla can overcome its obstacles and raise its stock to all-time highs as the future develops. In case you haven't noticed, Tesla stock has been declining noticeably. However, astute investors have noticed this downward trend and see a chance to investigate the company's other groundbreaking technology advancements outside of electric automobiles. The price at which Tesla stock is currently trading, far less than it's worth only a few years ago, is even more alluring. Currently, the price-to-earnings PE ratio of Tesla stock is approximately 45, while the PE ratio of the overall stock market is 19.2. Compared to Tesla's highest PE ratio of over 1,000 in 2021, this is a dramatic decline. There is still a lot of optimism over Tesla's potential, despite the skepticism of some investors and analysts. Not everyone, though, feels the same way. The stock moved recently in response to a statement issued by GAM Investments investor director Mark Horton. Horton boldly predicted that the price of Tesla shares will never again hit $300. He ascribed this forecast to the company's EV pricing reductions than expected. Lower demand while increasing output at the same time, the stock's trading volume fell to 46 billion shares, much less than the typical daily volume of 171 million shares as a result of Horton's pessimistic outlook for Tesla. In the upcoming year, investors can see a further decrease in Tesla stock if his projections come to pass. There are several variables that could affect Tesla's performance. A recession, growing interest rates, and inflation worries have all had a negative impact on the economy as a whole, but even with these difficulties, the car maker is benefiting from a number of favorable factors. Tesla's profit margins are one of its most distinctive features. They typically exceed those of its industry rivals. The business brought in an astounding $81.5 billion in revenue in 2021, which translated into $13.7 billion in operating profits and a 16.8% margin, compared to significant U.S. competitors like Ford and General Motors, whose margins usually hover around the single digits. This is noticeably greater. The remarkable profitability of Tesla can be attributed to a few important elements. First off, there is no longer a need for significant advertising and promotion costs because of the company's considerable brand recognition. Furthermore, Tesla's management has effectively incorporated vertical integration and manufacturing economies, enabling in-house battery production and direct-to-consumer sales. The corporation has seen increased margins and significant earnings as a result of these calculated actions. In addition to becoming a significant force in the auto sector, Tesla is also setting the standard for software that uses artificial intelligence to drive itself. With this cutting-edge technology, Tesla will be ready to enter the autonomous ride-hailing market by 2024. According to early investments made by ARK Invest, autonomous vehicles may bring in a new era of ride-hailing, with a potential market value of $14 trillion by 2027. This serves to further solidify Tesla's standing as a formidable innovator. Tesla keeps moving forward in the residential market by offering battery storage and solar energy options for households. In the first quarter, there was a remarkable 360% increase in battery storage capacity deployed compared to the previous year, indicating a rise in demand for these goods. With time, Tesla's production capacity has increased to match the demand, enabling them to satisfy the expanding demands of the market. Furthermore, Tesla intends to launch Optimus, a humanoid robot, in 2027. This robot is intended to be used in low-skilled occupations, mainly in manufacturing. Since there are many opportunities in the electric vehicle sector, investing in Tesla stock is a desirable long-term strategy. It is anticipated that operating costs would drop as more electric vehicle manufacturers reach scale, increasing sales. Global production of electric vehicles is expected to climb from 7.8 million units in 2022 to 60 million units in 2027, reflecting an outstanding compound annual growth rate of 50%, according to projections by ARK Invest Management. This growth rate coincidentally matches Tesla's projected output levels. The amount of time it takes to charge an electric car has markedly better. Tesla points out that charging an electric car for a 200-mile drive now only takes 15 minutes, compared to about 40 minutes 4 years ago. Furthermore, within the next 5 years, Tesla hopes to cut this charging time down to just 4 minutes. These developments help make electric vehicles more widely used. Although just 10% of new cars sold in 2022 were electric, Goldman Sachs predicts that percentage to reach 61% by 2024. Even though it faces competition from unprofitable rivals like Lucid and Rivian Automotive, Tesla manages to deter future threats by maintaining low prices. By prioritizing long-term market share over short-term profit, Tesla hopes to become a major force in the rapidly changing electric vehicle market. Given that both the US and European governments intend to outlaw the sale of petrol and diesel vehicles by 2035, these measures significantly enhance Tesla's development potential. Electric vehicles are becoming more convenient and enticing due to rising petrol prices. Tesla has addressed its environmental impact and is aware of it. According to Tesla's most recent impact report, 27% of its carbon emissions in 2022 came from the production of batteries and mineral extraction. Steel made up 8% of emissions, while aluminum usage was responsible for 18%. The use of Tesla vehicles, employee commuting, business travel, and downstream transit and distribution account for the remaining 47% of emissions. This is the first time that the supply chain emissions have been reported by the corporation. The lifetime emissions of conventional cars much outweigh those of electric vehicles, even though supply networks for electric vehicles now emit more emissions than those of gas-powered vehicles. Over the course of their 17-year average lifespan, conventional automobiles continue to burn petrol, but over the course of their lives, electric vehicles release 55 tons less CO2 emissions, according to calculations made by Tesla. As stated in its presentation at Investor Day, Tesla intends to reduce the price of its next-generation vehicles by 50%. The company may be able to sustain additional price cuts without sacrificing its industry-leading profitability. Even while Tesla's stock still has a ways to go before hitting its prior high of $300 per share in December, it has started rebounding ground in 2023 and may keep rising all year. What do you think about the Tesla stock hitting $300? Click the screen to watch the next video and share your assessment of Tesla. I'll see you over there.